how you can take advantage of this special setting indicator, applying it to your trading analysis and finding your entry is what I'll be sharing with you in this video. Previously, we've talked about this zigzag indicator and we've highlighted how exactly we can identify our structural zone by the help of this indicator, and we'll begin to identify previously based on this price movement that this is a typical downtrend scenario after price break structural point at this zone, and afterward we'll begin to move in this direction. So this is a typical downtrend scenario. The question is, how do we trade this if we must not trade this pattern in isolation? It must be traded in a certain way, which means that by the time this indicator helped us to identify our areas, we will now proceed into marking each of these zones. For instance, let me give you a scenario. If you are a trader or someone who trades support and resistance zone, obviously this will be your resistance zone. So these zones here, all of these zones, the indicator already marked this point, so this automatically becomes our point of resistance, and this becomes our point of support. This is our support zone, just follow me carefully. Now, if you are someone who trades support and resistance, this automatically becomes our what? This automatically becomes our support zone. So, look at what happened here. The rule, remember, is that initially here, this is our resistance. At this point, price will test here and left. So when price left here to this zone, here was our support zone, because price left here and was going up. So automatically this is our support. But do you remember, when trading support and resistance zone, anytime price break a support automatically and retest it, the support becomes what? A resistance. So here now, this has been changed from a support into a resistance because price break through it, and then look at price come back to retest that level of support, which validate it as a new resistance. So look at what happened there. We have a candlestick formation, and look at this. From that retest, now we have this bearish engulfing candle. So we would have sell from the close of this bearish engulfing candle, and look at our indicator window. Our TDI is below 50, which confirms to us that this is a continuation pattern. So it's a sell, it's a downtrend. We are in the direction of the trend. One, we've established the trend because this is a downtrend. You can see your lower low, your lower high, your lower low. So this is a downtrend. So here is a formation of a new lower high. So obviously this is a typical downtrend, and we use our candlestick pattern. It's a downtrend, it's a resistance zone, and we use candlestick as our entry trigger. So what is still our new zone? So we are still extending this zone. You can see that now we have this here. So we have this here. So these zones are too close, so we'll mark it as one valid zone. Okay, so let's have it as a single valid zone. So now you see we have this zone properly marked out, and our expectation now is what? The price will pull into this zone and then give us a bearish candle confirmation so that we can sell. Okay, this is our valid zone. Or price will go through it, break above this zone, retest it, give us a buy confirmation, and will continue to the upside. So that is a support and resistance way of trading this strategy. Which other way can we trade it? We can as well trade this in our smart money way. And what that implies is that we identify our order block. So here is our order block from this structural point. Okay, and then if you look critically, we have another point of interest. So we have a fair value gap from all of this zone to this point. So if we are to mark our fair value gap, it simply means that price is currently inside that zone. So here, let me mark this out. Now that is our fair value gap. Okay, so which means that here is our order block, and then here is our fair value gap, FVG, or in imbalance, depending on what you understand. So what do we want to see? We want to see a bearish momentum for us to sell, or price will retest this order block before it will now pull down to this downside. So depending on what suits you, depending on how you want to trade it, either as a support or a resistance zone, you can take advantage of this, combining using this indicator markup. So already we have another zone here. Look at this zone. So this indicator helps you to identify all the point of price reaction. Okay, it automatically marks the reaction point for you, and yours is just to come, wait for price to come to those zones, then you make your trading decision, and then you execute your trade. So now we have this zone as a temporary support. So what are we expecting? Maybe price will now return to this zone, right? Retest it and give us a buy or buy to the upside, or price will come it, break this zone, retest it from support to resistance, and continue to the downside. So this probability of what we might get as far as this chart is concerned. So let's look forward to more assets and see if we can get more assets that we can look into by applying this particular strategy. So let's look at Crash 500. Beautifully well, you can see that Crash 500 has been bearish. Of course, your lower high, your lower low, your lower high, your lower low, lower high, lower low. Okay, no, this is not, this is our lower low based on the markup of our zigzag indicator. So look at this. Let's now find our entry from all of these zones. So first of all, we have this particular order block. So here is our order block. Look at this. This is our order block being highlighted. Okay. And then the next is our point of interest. We have order block as our point of interest. Here is our fair value gap. And then in this case, we have a sniper entry. Very sniper entry. Look at price pullback. Give us that bearish pin bar. You see they sell to the downside. So that is a massive one. Of course, you can see that. And if you are trading this as a support and resistance zone, here is your zone again. This is now a support based on your price reaction. You have this bullish engulfing, you buy, right? So remember, here again is your point of, this is your new order block, and this as well is a resistance zone. So new order block, and that is a resistance zone. And then look at what happened. Price pulled back into it. We have this candle formation, and it fall all the way to the downside. so you can see how exactly you can leverage on this, and it works very well. Thank you for watching, and don't forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video.